All right, guys, let's get rolling. Between last meeting and this meeting, a lot of you guys are in the trading room, so you're up to speed with this Brexit, so we're not going to cover all of it, but you know that the leaves got it, created all kinds of uncertainty. It's brought us down a whole bunch in the equity markets globally. Treasuries caught a bid. We're still down 100 points from last Thursday's close before they knew what the results of the vote was going to be. So we're still extraordinarily weak. 100 handles lower. They've taken up some of that slack. They broke them to 82 yesterday or 81 yesterday. So we're a little stronger today, right around where we started on today's session. But as we go forward, I keep reiterating, make sure you keep an eye and an ear on the news wires for anything that drops down that could throw a bid in the market if we get kind of in a capitulation type of sell-off, central bank coordinated rate cut. It hasn't been that disastrous yet, meaning that fearful. The next shoe to drop could be another country that's serious about a referendum of their own to leave the European Union. So the whole thought is leaving the European Union creates a lot of uncertainty, maybe a recession in the UK that could spill over to Europe, that could spill over to the US. Markets hate uncertainty. I've said this a million times. They'd rather have something bad but know the details of it than something that might actually end up being good but really not knowing. And that's the killer to global equity markets, the uncertainty of it all. It could net be great for the UK, Europe, and the US, and everybody who voted to remain could eventually say, man, this was great. I agree, we should have done it. But doesn't matter. Right now, the uncertainty is the killer. That's the reason why we're off so much from Thursday's highs when they pretty much baked in that they were going to vote to remain. That was a surprise. That's why we got an accelerated, overdone at some point sell-off where you get this bounce because they didn't bake in the fact that they had a chance to leave or the fact that they were going to leave. And that's what the results ended up being. So we're moving to the end of June. Central bank stuff in July, but not for a few weeks yet for our FOMC. But the ECB is to keep an eye on them. European leaders, any kind of talk as to how bumpy a road this is going to be. We'll continue to move. This is a good summer trade, a much better summer trade than it otherwise would have been. This is a big deal. There's no doubt about it. The topic of today's session is more thin spots with a chart that Dan, a longtime Edge member, stumbled upon. I'm not going to go over it. I'm just going to talk with him about it. We're going to show his screen. So, Dan, you there?
Yeah, I'm here.
I'm sending you controls. You should be prompted to share your screen.
Okay.
You
guys are seeing that?
Yes. Sound good. Sounds good. Looks good.
Okay. This is a chart of the ZB. You see a lot of colors on it because if not everybody here knows who I am, I'm always in the car for the first half of the day, and I'm in the car right now. I was trying to come up with a way to make thin spots stand out because they are such good magnets, support resistance, whatever. So this is a 0.035 Renko chart, which I use for like entries. It's pretty fast, but you can see here these are thin spots set with the indicator. I'll show you how to, well, let me talk about it first. It's multiple price highlighter. I have it set for price periods that are less than 25 contracts in the 30-year bond, which is a pretty thin spot for the bond. They don't, they're not a million contracts a day, but they're 100,000.
Let me stop you. Is it
yeah.
less than 25 total on both sides of the price or just one side?
That's a good question. I don't know. We'll discover that together when we walk through the highlighter because it.
Good. Yeah.
I made it so one thing that stuck out to me when I saw it was when price is going down in the bonds, like you can see here, your highlights are people get stuck in these thin spots. That's why the box is green because it's buyers versus sellers. And you can see it's turning around here. You've got volume imbalances here, but you got people getting stuck at these levels. This is a perfect, I just wish I was trading. This is a bounce off the VWAP that is classic. But what I have found, for the most part, I like to fade it when it gets near a higher low. It's just because for me it's a quick. That's like a yes or no trade. It either bounces for your fade or it doesn't. You know it pretty quickly. And around 9:45 today, here, you can see price. It's trying to break through here, and it's around the VWAP. You can see some people get stuck here, and then it happens again, and you get a double volume imbalance right here to the downside. And like when I see that, this was an outrage for me today. If you've ever heard me before, you know that I'm out here, no matter what happens. Even though I leave money on the table all the time, but if I'm leaving money on the table, I'm making money, so it doesn't bother me.
I think that's awesome. So you're getting, it's almost like you're getting a signal that a support area is going to fail because they're just not trading anything on the upticks.
Exactly. They just not only can they not get through it, it's a weak attempt at best. It's less than 25 contracts here. Well, let's try it again. If you see my cursor, they try it again, and 5. That's nothing. And then you see people just jump all over it and start to sell.
It's not letting anybody out. Is bottom line. It's not letting the longs out who want to get out for either a profit because they bought it below it, or for a loser because they're stuck from above. But either way, it's just not letting them out.
And it continues to do so. If you take a look down here, the same thing happens here and here, which lets you know you've got continuation. And then if you got more stones than me and you're looking to hold it, you start to see the same thing now happening here to shorts. The shorts that we're trying to continue at these 2 price points are not getting anything to happen. It's super thin for those price points, and you can see just above. That's also like a hallmark of this thing is where you see these recognizing failure for it to be able to go through. You almost always see a nice volume imbalance showing you that's why you got people jumping over to sell, and you're right. You're seeing people not getting let out, and then it's just like you can see. I'm sorry, I'm pointing my finger in the car. You're seeing, as delta changes here at the bottom, and this thing down here is just a if you know what a zigzag is, it's just an oscillator for zigzag. This is an old chart that I added this to, and then.
So let's say you were looking to get long, and you see those reds highlight. It's
shorts getting stuck down here, and that gives you an idea to get long somewhere. Like if I was looking at this, I saw this happen, and I saw this volume imbalance starting to build right here at the 22 level. I'm pretty much going to be a buyer right there, and knowing me, I'm like out here.
And that's cool. Here's the key. I mean, I understand why this would work, boom, like that. But here's the key. I don't know if other people would understand why, and I think they do because of all the edge material of why, okay, they're not letting them out. So kind of a wait and see type of thing. But here's the key to a chart like this. Dan's found that his 0.035 Renko is a good periodicity for what he wants, and that minus 25 or less than 25 is the number for this highlighter to come up to mean something. That's something that has to be tweaked for an E-mini chart.
Yeah.
You could see he still uses the delta profile on the right, which is cool. Look at it, came right into that green profile at 1819.
Yep.
And then you start getting some reds because it doesn't trade there and rotates up. How long does it take for this bar? Explain to me what a 0.03 Renko does. What has to happen for a new Renko to get populated?
That's a great question. I don't know. I just messed around with periodicities, and I usually 0.0314, which is pi, which is something that I just thought I'd try once. That seemed for the time frame that I use to show perfect rotations for the small. I mean, I consider myself a scalper, and I don't care if anybody calls me that or not. And so for these small moves that I'm looking for, that time frame works perfectly for me. I mean, if you take it up to 0.05, it changes a little bit, but like a 1 Renko, that's like, it's just completely different and way too slow. But I'm messing around with this and the periodicities that, people personally use. You still will see the same things, even in a longer time frame on the P&F chart. You'll see the highs and lows stand out like sore thumbs, where if you think about it, if price is going to turn around, as it always does, it turns around at some point. This is how it happens. Somebody is the last guy in an up move to get stuck. Somebody has to get stuck, and usually when that happens, it's thin. It's really thin. And every serious turn that you see on a regular chart, you look at it on a chart like this, you'll see somebody there getting stuck. And so for me, I mean, I don't consider this any kind of holy grail or anything, but I need visual aids because I'm not looking at 4 screens for most of the good part of the trading session. And even like when we were trading the other night, when we were trading the Brexit thing, I was just sitting on the couch with the laptop, just using the laptop.
Nice. Well, you've gotten used to it. That's nice.
Yeah. I mean, I still, like, if I'm sitting at my desk, I will still use, like, here's just another instance. This is exactly the same thing we saw back there at 9:45, and a perfect opportunity, especially when you expect it. So if you're looking at, okay, here comes the VWAP. What happens? Sometimes it bounces off the VWAP. Let's see what happens. And that's exactly what happens here. It can't break through it. It's super thin. You got people selling below it. It's selling below it again. Now, it wasn't the greatest move in the world, but you could get a couple ticks at it. Or, as it moves along, if I get to this point and I've only got a 1-tick winner and we're now, a couple minutes, 10, 15 to 10, 19, I'm going to either take a 1-tick winner or scratch it. And now you're seeing the same kind of thing happen. You got a double volume imbalance of buyers here. Some people getting stuck at this level as it moves up. And when you see, you're looking at your delta down here, I would jump in with both feet on something like this if this VWAP wasn't here, but let's see what happened anyway. Yeah, I mean, it's still, that was when there was a nice long run in the bonds. It came back and touched it twice. What you're seeing right here these are just pullbacks. If you've seen this happen and you didn't get in and then you see this pullback and you see people get stuck, and then people buying, like, to me, that's a no-brainer.
That's a stuck, yeah. Here's what's cool is this is a stuck kind of almost on the other extreme. Instead of having a lot of people selling it like in the Delta and it doesn't go down, this is not a lot of people are allowed to get out because it didn't go down and only a little bit traded. Yeah. And they're just like anybody long, well, I'm running my arrow along it like they could see it, but anybody long, put your arrow at the 290 times 98. Right in the middle, right to the left 2 bars.
Oh, I see it right here. Yeah.
People who are long even there go up a little bit. Okay, they got a profit, come down a little bit. No, wait, I screwed up. Go back to 290, 98. People who are short from right there goes against, go up, it goes against them a little bit, comes down. They're trying to get out for a scratch, nothing trades, boom, and they
get another chance at it, and still. What this tells me is not only is very little takes place here. If you're watching this, like, it's much easier to look at this now than it is to watch this happen real time because this is quick, as you would expect. Thin spots are quick, right? Even thin spots that stick people are quick too. Like, if I'm watching this, and basically I've had to, it's not mechanized or anything, but once you're looking at this being formed live, and it goes over 25, that box will just disappear. You can stand down. It's when it pops off of there, it'll pop quick. You got to be ready for it. You got to anticipate.
You're there. Yeah. That's the word. Anticipate. Good word.
It's best. I found it's best to use this. Like if you're looking for something to happen at a certain price, this is a great way to see it happen at that certain price. If you think, well, okay, this has been a pretty strong move from here to here, and yeah, you got some people fighting it. Right, or it should bounce to the upside off of this VWAP. And for the longest time, if I ever saw 2 volume imbalances, like, it doesn't get much better than that. If you're looking at something like this taking place and you trade it, and this doesn't happen, it gets over here, or stays on this number, you'll see that volume imbalance disappear and to scratch it. Or like what I'll do is I've been thinking about this more since the last time we talked about why I do spread and spread the same securities sometimes, and it's because, like, not only does it keep me interested, if you've ever had a day, and I've had plenty of them, where you've either made some bucks and you want to sit on it, or you've lost a few bucks and you get gun shy. The day goes on and you see trades, you go, man, I should have taken that. I should have taken that. When I get spread into both sides of something, that's what gets me to keep playing and to take those trades. That I've had too many days where, like, that was a no-brainer, but I just hesitated because I had already made 4 or 5 ticks the last hour or something like that, or like, I had a bad day and I lost some money. So
that works for you. That's what's cool. Yeah, it works for you.
So let me show you real quick how.
I'm going to do it along with you. Are you gonna
Okay.
are you gonna show us how to do it?
Yeah, go to add.
Is that what you were gonna do, or are you gonna show something else?
I was gonna look at it to refresh myself on it. Let me just. It's the. There it is. So if you go to add indicator M and select multiple price highlighter, then select volume below X, and I've got it at 25, and then I've got it for showing a hollow box, positive delta green, negative delta red. That's it.
Wait, hold on. Leave that box up. So you got volume. You got below X.
Yep. I never even looked at all the things that you could do here. I actually think
Box.
I'm not smart enough to have figured this out myself, and it's been over a month since I did this. I probably Googled something about thin spots. There may be a video on the Market Delta website from Trevor of how to do this. But anyway, you can see it right now, and this will be recorded. I'll just go ahead and do it from scratch. Go to add technical indicator, M for multiple price highlighter. Where is it?
What are you doing?
Then,
One? Yeah.
I'm just doing it from scratch, and there it is.
Yeah.
And then you just, and I guess you could do it for high volume too. And it's the boxes that highlight are already preset for that. Let's just see what's happening live.
All right. I did mine for the ES greater than or less than rather 49.
Uh-huh.
And
This,
it works every time. No. The one thing I got to remember is if it's calling too many like lows, it's too low of a number. Like if you get too many of them. You don't want too many of them.
you mean too many contracts?
Yeah. Like your number 25 seems good for the bonds because there's not too many greens and red boxes.
Yes, exactly.
Just like the filter. This is like a opposite filter. Now the filter is for greater than, and this is for less than.
Yep.
And that's kind of cool. So I did 49, and it's too many. So I got to up that, in my opinion. I'd up it to 74. And I'll add 74. Still too many. Less than 99. No, wait a second. I got to go down. I'm stupid. I'm going up. There's being too many. Let's see what the, shoot.
The real reason I was trying to create this was I was going to stick it on a P&F chart because oftentimes when I'm watching you narrate the day, and I can see on your chart you'll point out a thin spot, which when I'm looking at it I can't see it because my chart is too small on my end. I thought if I had an ES chart running, that would highlight and show, then I would be waiting for.
Wait a second. I'm sorry. Go ahead. I'm talking to myself.
I'd be waiting for the ES to make a move towards that thin spot, like a magnet, and then obviously trade the bonds in the opposite direction. Once I saw this chart, I started screwing around with it. I never made the ES chart I wanted to make to show bond direction. I mean, to show like a magnet for the bonds. Like you can see what's happening right here. We didn't get a thin spot until right here, and it popped off that a little bit. But it looks like this is failing.
I think this is a good visual for guys to look at it and see. Hold on. I'm trying to think. I'm going to play with it. I think I've got it, but I like it. To me, it's a thin spot highlighter on the edges, but on the potential edges.
Yeah.
You're always going to see it. It seems like it's only one side, meaning if it's the right side of the footprint, it's going to be and it's less than, in your case, 25, it's going to be a green. If it's on the left side of the X, which is aggressive sellers, and it's less than 25, it's going to be red. And it's always by zero. Zero by something or something by zero. And it's showing you that didn't let people out on that swing.
Yeah, if you're looking at it from this point of view, if you're a longer hold person and you're seeing these, which are people, that could be this could be somebody just covering a little bit of a short. It doesn't really matter. What happened is it didn't stay there very long before it dropped from there. So, like you could use these and see these over a 5-minute time period to say, like, this is still doing what it should be doing. Anytime the price pops up, it's short-lived. It's a short amount of contracts, and it's followed by
Yes.
lots of selling.
Yes.
And then you see this, it starts to turn around, time to cover.
The thing is, this is the thing, and I'm good at just equating things to real time, because most people, when they look at something, it's going to look different in real time most of the time. And that's the struggle people have, is everything looks good after it's plotted, but in real time it could plot and go away. So, like here, let me show my screen a second.
Sure.
And then we'll go back. Oh, shoot. There, I'll take it from there, there. All right, now you guys are going to start seeing my screen. And I did this NPH multiple price highlighter on a 4PNF and minus 50, less than 15. So right here, this 13 times 0 is, it looks like, wow, it called the bottom and it rallied 5 ticks. However, it could have been 13 times 0 and then went up 2 ticks and then came back down and was 190 times 0. Then it would, you know what I mean? So it was like, It's red, let me take it. But it only sticks red when the ones work. Now, here's the kicker. They're for good visuals for near-term support resistance. So it's like, all right, you didn't let these guys out here 2 rotations up, or when the market was trading down, the offer didn't trade much here. Came back down, went up, the offer didn't trade much there. It's like really give people a good sense of the top of the range and where these guys aren't getting let out that are long from above.
It's not surprising that 2 of those are sitting right on the VWAP and one's right below it. I mean, if you think about it, like you said, price could have come down there, it could have gone up, come back to it, and then that box would disappear. If you want to think about it as a stoplight, that is your stoplight. If you take that trade and then it comes back and starts to fill that price and it goes over the amount of volume that should be there, good time to cover.
Well, here, like these reds back here did what? Created great support for a long time until just now.
Yeah.
Until just now. And we could go and we could toy with this and say the same thing here. Look at this. And I'm just looking at after the fact, because real time you're going to have to toy with it and realize things don't look the same. Like it looks like it's 4 times 0 and then boom, it's 50 times 0 and the price is down and there's nothing red there and it looked like it worked and it didn't. But it's already red by the time you're up here, okay? So now let me get a pen, and that shows good support where you're like, hey, I could stay long. If I'm bullish, I could stay long. This is my risk below this guy. They start letting other guys out. Yeah, there's a good explanations around this, Dan. It's a good find because it fits right within, well, it's a thin spot. It's just a better visual. Like I've always said, there's always better ways to look at the same thing.
Yeah, if
you can see these. I'm sorry, go ahead.
Well, no, anybody throwing this on your chart, I mean, I'm sure everybody here is cautious. Watch it in action, and you'll get to understand exactly what Anthony is saying. Like, that highlighter is there, that highlighter disappears because it's just a counter. And if price moves off it before it goes over the number that it's counting, it stays highlighted, and it shows you that a thin spot has some type of support or resistance. If it disappears, it's not coming back. If it disappears, it won't. Nobody can remove those contracts.
Yeah, that's it. Yeah. Excellent point. It ain't coming back.
So this, this will help. This will help you. Hopefully, everybody. I still do it too. I hang on to things too long, which is part of why I spread things, because it's just part of the way of my personality. And it's something like this helps me know. Don't do that. if you expected something to happen there, like look at that bounce after bounce after bounce into that VWAP, and how many times the highlighter showed like that's the reason it couldn't get through. It's just like there was no volume at that price. So certainly good.
There were no sellers getting satisfied.
Yeah.
There were no sellers getting satisfied. They were still in the market. And if sellers don't get satisfied, they're still sellers.
Mm.
By sellers not getting satisfied, I mean not getting filled. Thin spots are sellers not getting filled. Sellers don't get filled, they're still sellers, right? So the probability of downside is decent. Now, Peter asks a good question. It's almost like an answer within the question. So the entry, and we're just brainstorming here. The entry so for the entry after the box appears, is it a limit plus one tick above the red box and one tick below the green box?
That would be optimal if you can get filled there. Just recall that as you see that happening, it's gonna, especially in the ES with the bonds, you'd have a couple of breaths. But if you think about it, like I'm just looking at that one. The last green box looks like it says like 0x4 or 0x9 or something like that.
Right.
Just imagine how quickly it's going to appear and price is going to move off of it. If you have, I would imagine, if you have time to get filled at one tick below that, that would be great. The longer, it sits at that price without contracts trading, which doesn't happen too much in the ES, but let's say it was 10 seconds, then if you sent a market order to get short there, you would be getting short one tick below that green box, or maybe, two at worst. That's some pretty shallow trade right there. There's not a lot of, but it's stuck between two VWAPs. But yeah, that would be optimal, is to try to get it right on the other side.
Well, that's what that is. It's like, the closer you are to it, the less your risk would be.
Yeah.
So,
sure.
Now this is good. This is a good meeting here. So now, like, what happens is we come down. And it's a shakeout.
It came right to the VWAP. It didn't thin spot, but that doesn't always happen.
But you don't have to buy it here. You could just see that the bulls got this now because it's traveling through this red on the upside. And see, that's the thing, is like this tells the story maybe a little bit easier for people, and that is these guys. The sellers can't get filled. They all just say the hell with it, sell it into the bid all the way down here, and then it goes up, and they would have got filled. Well, the reason why they didn't get filled is there's too many of them. They had to sell it down before it went up. And then Peter says, short, let me pull up Dan's chart. I'm going to make you presenter again, Dan. Show that chart again, if you will.
Okay. All right.
So he said short 03. Why, Peter? Or 04 he's short?
He's short the bonds right now?
Yeah. Maybe just off. I don't know if it was off anything in here or if it was off the pop in the S&Ps.
Okay, so he got short.
Oh, there
right here.
All right, you didn't download it.
Yeah, that is one tick below a thin spot.
Nice job. And here's what's cool is that it looks
you're getting more thin spot right here, which means you might have some more downside.
And you got to get yourself looking. It's going to look a little different. He says, interesting. Peter says it looks a little different in the PNF. I'm going to open up. Peter, I'll open up your mic. Looks different?
Yeah, it does. It's, I'm glad to see the thoughts on his Renko, because I'm so used to looking at a PNF. But yeah, it was pretty clear. You could see that it printed, it started out red, and then just as you're saying, when it goes away, it can't come back. I love that.
Yes,
that's great.
It's not one of those blinkers like, oh.
No, so then now it went up, so it went green, and it didn't go really, and you could just tell it was sort of like just staying there, and then you got the stealth and some other supporting information to suggest that was a good place to get short, plus it's an area that would be interesting to get short anyway. So, nice stuff, Dan. Thanks.
Yeah, that's cool. Well, here's, then the power comes where the stocks rally. So you're, all right, I'm going to get short 04s, and then you get the bid and the stocks that come in, and that looks like a head fake, and you got everything cooking. You got the longs that can't get out because nothing trades on the offer on the highlighter. The ancillary's going up, which is bearish for bonds, and this is a nice move, 4 ticks lower in this amount of speed.
Sure.
And then go ahead.
Go ahead. Well, I'm just thinking of another application. When we were looking at the ES, which made it down to the VWAP, and as we noticed it came up, it didn't hit a thin spot. It finally broke through those resistance levels. Let's say you were playing that. You bought it down near the VWAP, and you're watching it go up to where it maybe will turn around, and it never gave any kind of thin spot. There was plenty of volume there, giving you a reason to maybe if you wanted to get rid of something there, you get rid of half, but you don't close the position because you should see some type of resistance in the form of thin spot, at least initially, and we didn't see that there, which means you would probably want to hold it.
You see no flash. It just kept grinding.
It just kept going.
It didn't even flash. It didn't even flash like there's a thin spot. Or, like here, there's a green that just popped in the S&P on a pullback and a 4 PNF. So that's it already rotated, however. So I look at the bonds. I still think the bonds, though, let me see this. I'm going to look at your chart, actually.
Well, the bonds can't go down right now because you got a big imbalance right here. It's stuck on the VWAP. And of course, I should say that.
No, well, that green, that green. Here's the cool thing. What was it? Green. There was a green highlighter that went away, wasn't there?
There was, yeah. It was at right here at 1.
The reason why it went away, the reason why it went away is because more traded on the offer. The reason why more traded on the offer is because the S&P's rolled over a little bit.
Yeah.
But the S&P's just re-rally. They just jumped.
Yeah, when they jumped off the VWAP, when they bounced off the VWAP.
Yeah, and they went to a thin spot and re-rallied on the 4 PNF.
You see that imbalance. People are just buying this. I'm not watching the ES at all right now, but I mean, if are you still holding this, Peter?
Bond?
Are you still holding these bonds?
Yeah.
It's going either way now.
Yeah. I took some off. I'll take. I'll see if we can trade these down for a little while. Yeah.
But if you could keep holding these S&Ps on their thin spots and keep ratcheting it up, you're in good shape for more downsides through 173.
Yeah, we see that the oil's going up now, so this is all looking good.
This was a great session because it fits. It's like I've said, it's another way and oftentimes a better way to look at the same thing of stock traders. Visuals, and tying all these things together. So you're not feeling anything, you're seeing it. Don't trade what you think, trade what you see. Trade what you see, don't trade what you think. Now you get this delta imbalance. No, this is good. I like it. I think it especially in this like real-time example of showing, if you look at Dan's, he got the green in there and the ES showing a head fake. Just telling everything that are simple. I mean, simple things. Head fake, shorts are probably in trouble in the SPOOs, and longs may be in trouble in the bonds. And then that opposite.
Yeah, you just saw another thin spot just got created here, and it just dropped 2 ticks right after that. Once it finally got through here, I'm sure the ES is moving up. But
yes, the ES keeps holding on to their curling and holding on to their thin spot. Yeah. There's no reason.
And we see a couple thin spots on the bonds disappear, and then they continue to go down. So that's pretty cool. And actually, there's one right there right now.
Well, now you know the shorts from above couldn't cover. There's only 10 traded, but you kind of know that as it comes in. What helps you is the ancillary. What gets you out is if the S&Ps roll down, you can maybe jump out. If the S&Ps continue to drive north, it's like these bonds will probably continue to come down. And you'll see that MPH go in.
They sometimes don't want to come down.
It seems like it. I mean, it seems like they're fighting it for some reason.
Everybody wants to put their money someplace where they think they can get it back.
That's true. Well, you can see, like, this this would be enough for me to say that if it, that could be the beginning of a turn. You got people get stuck down there at the 30s.
Here's the other
We're
thing.
very lucky to have this situation at the moment, to be honest with you.
Yeah. But the other thing, I'm looking at the S&Ps, it seemed like right at the bottom of the hour, something buy programs came in and jammed it up. 11:30 Central. I don't know if it was exactly 11:30, but it seemed like that's when we grabbed a bid and just drove it north, and
Boom.
they're squeezing the hell out of shorts. And if you look at an S&P, the 4PNF's holding each thin spot on the way up.
Yep. Yeah. That one at 1475 appeared a little bit ago.
Nothing.
S&P's going to take a little bit more work, but I think there's still some optimization to work on here, or some.
Well, it's the periodicity and
Yeah.
the number.
Okay.
But what's cool is it's giving you a sense of what kind of chance. You know what? Instead of trying to be playing exactly when it appears, you want to play it through a previous one that's already a staple, just using using it as near-term support resistance. That's cool. All right, I'm going to wrap it up. This was a good session. Dan, thanks a lot.
Thanks,
this
Dan.
was good.
Hey, no problem.
And we'll keep it up in the rooms and everything and keep rolling. I recorded it in case you missed it. Couple hours. They'll post it to track 4. Wait, I got one question for you, Dan.
Yeah.
Are you driving and doing this?
I'm driving now. I just pulled back. I got. What do you think happened to me when that jobs report came out 3 weeks ago or whenever it was, when interest rates cratered, and it was already busy? I mean, it's out of control busy, and everybody goes out of town for 4th of July, so all my clients know that I'm the guy to call if to handle something, because I usually don't go out of town, but I am this time. So yeah, I am going to inspection number 5 today.
But I mean, it'd be funny though. You just stop in the middle of the intersection and start trading.
Yeah, but I don't stop. Let me give you an example. My wife got me, my birthday was last Sunday on Father's Day. She got me a dash cam because a few weeks before I was driving down the interstate and a dump truck in front of me, their rear brakes exploded, and a piece of the brake drum hit my car, and thank God it didn't come through the windshield, but it pummeled the front end and it ripped off one of the, I've got a Grand Cherokee, it ripped off the side step bar. So she thought if I had a dash cam, I could, record things like that, etc. And I said, listen, aside from that happening, I'm the one causing accidents. I am speeding and going through red lights, trading at the same time. The last thing I want is a permanent record of that, accident, although I've never had an accident. All right, there was one, but it was before I was trading. But I did have the computer in the car.
So you could have the audio of me talking in the room.
Before I was trading in the car, for years I had the largest client in the country for appraisals would broadcast orders in my area, first come, first serve. So I would have the laptop in the car when it was first possible with Verizon's cellular network to do that. So I have some experience reaching over and using a laptop before doing this, and now it's like second nature to me, although there are occasions where I hit the wrong button, but it happens to me home too.
Just be careful. We laugh about it, but you got to be careful.
Of course, I drive in the slow lane like I am right now.
Yeah, you actually might, if you're doing it, and we kid about it, but it is dangerous. You don't want to hurt anybody else. But if you're actually cognizant of it, you're maybe safer than you would be just driving like a crazy person and paying attention, because you're just going slow. And
it makes me focus.
We're more focused on driving than someone that's doing other things. There's a skill to it. But real cool stuff, Dan. Thanks for sharing again. We'll see you guys next. Oh, wait, one quick reminder. Let me end the recording because it's not relevant for people.